26th of January, Nigel Hawk speaking, Hawkeye Traders. In this brief video I want to show you how Hawkeye reacted to the market today in the stock index EMD and how to avoid potential losing trades in FX. First of all, let me just show you the EMD. It was set at 176 ticks today, and again the Hawkeye gearbox is absolutely spot on at telling you what time of speed of ticks to trade each day. So it was an 88 chart, a 176 and a 352, and we trade that in harmony with the gear changer, which tells us during the day which market to look at. It was a slow day, so most of it took place in the yellow time frame, which is this time frame here, and of course that coincides with looking at the Hawkeye KISS, which is our treatment of the advanced decline issues in the market just being flat. So let me just extend this window out so we can see a little bit more, and you can see that at the beginning of the day we had a magenta bar here, which is a wide-ranging bar down. It's twice average true range, setting up for a sell. If we go to our roadkill indicator, we can see that although the volume has changed on the double time frame speed, 176 times 2, the trend on 176 times 2 is still green. We're looking for that to be either red or white, neutral, before we can enter a trade. When the trade does come along here, you can see that there's the dark dot on the roadkill. We can see that the close is not less than the open, and it has not broken. There has been no close less than this wide bar, so the trade is invalid, and we go sideways here, and you can see that we then come into a white position on the trend here. So the trend on the double 176 chart has gone neutral. Our volume has already gone positive. Our gear changer is telling us that at this time we should be trading the yellow time frame, which is this, and sure enough the market rises, and you can take your profits at wherever you think appropriate. We like using the Hawkeye levels, so we'll go to level 1s, level 2s, levels 3 on that trade up. And you can also see that there's the trend down, and going into the end of the day there was no trend until there, and I would not have taken that because I consider it's gone too far into this price move already. Let me just put on the Hawkeye levels, which I thought were already in place when I set this video up for the broadcast. Hawkeye levels. And I'd like to see where we would have got to. On that trade there, it went up to the level 3, which is our first target. If you were trailing this, you were waiting for a close under the 2, which didn't happen. It went and closed above the 4, and then it came and closed beneath the 3 line. So you had the opportunity of getting out at the 3 on both exits. And then on our way down, you can see that it just traded pretty narrowly all the way down, and you would have taken your profit out here when it turned white, because it's of no consequence what's happened and there's been no progress. So we would come out, and as I said, we would stand aside on that trade there. Now what I also want to show you is on the Forex, the setups to avoid. And as you will well know by now, my favorite time frame is the 360 minute, and the fat man is set to 720 minute, half a day, and here is the roadkill indicator set to 720 minutes. So there's the 720 minute volume, and there's the trend off the 720 minute. So I have here a potential short, which I would not have taken. And the reason that I would have not have taken that if we'd come over here, you can see that although the dollar, which is the cyan line, is declining, the magenta line is hardly rising at all. And I like to see angles put in to the lines rather than a slow drift. And then when we come over here, again, there's another short set up here. And would we have taken that? Well, the same thing applies. Although the magenta line is rising, you can see that the cyan line, which is the US dollar, is just staying flat, which means that there is going to be no price movement in this at all, and that is what's happened here. And also on this chart is another great example of a wide-ranging bar, which is the magenta line. So we've got the wide-ranging bar, and about 80% of the time the price will always want to come back inside that wide-ranging bar. And sure enough, there's the wide-ranging bar, and that's taken another 3 days, virtually 4 days, to consolidate in here. So just a very brief explanation of Hawkeye to you. Please come into the live trading room this Friday. Register at our websites. I will be there with Randy. In fact, I'm going to be in Buffalo at Randy's house these next 2 days. So I shall be there, and we will set up the room at 9 a.m. Eastern. Questions and answers for me, and more long-term trading. And then the stock indexes will come in for Randy to trade at 9:30. So hope to see you then, and profitable trading. Thank you. Bye-bye.